Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Wednesday, October the 13th, 2010. Well, the market changed trend again today, and we have the market trading within this range here. The market stopped trending down in this higher time frame, but change of trend to the downside today with the candle making a lower high and a lower low. A larger red body candle than the previous day, so the sellers have made more net bearish progress today than they did on the previous day, so there's no bullishness in this market, and the market tested the support offered at 77, the round number. We can see that it's been tested on a few occasions previously, and the buyers came in. Today the buyers came in, but they weren't strong enough to close the market up above the midpoint level. The sellers did maintain control of this market, only weak control, and they did lose some commitment, and that's what the shadow on the bottom of the candle is telling us, but only a small amount. So the sellers have maintained the control and have shown at least some commitment to taking this market lower. Obviously, the 77 area is very important for this market. We should be looking for a potential breakout to the downside below that area, and we do have some solid support offered at around 76.60. So we should look to that, and if the market does break out, that certainly will be tested over the next day's trading. Now, the market is trading down below the cloud, so the market maintains its overall negative bias in the big picture terms. It's also trading down below the Kijun-sen and Tenkan-sen, so the market's bearish in the medium-term and fast-term timeframes. The Kijun-sen remains flat, and that reflects the lack of downside momentum in the market at the moment. And while it remains flat, there is still a possibility the market could retrace back up towards the Kijun-sen, so that is a possibility. We don't have any solid signs of that happening now. The market would need to do a lot of work to do that because we do have solid overhead resistance. We have resistance offered at the Tenkan-sen at 77.87, resistance at 78, then 78.94, 79.5, and then resistance at 79.95 where the Kijun-sen is trading. So very solid resistance overhead. The market will need to be quite bullish to test any of these areas up around the 79.5 region. It's unlikely that it will do it very soon. The more likely scenario is that the market will test 77 and break out to the downside and test 76.60. If we look at this, we are in a higher time frame downtrend with a series of lower peaks and lower troughs, and we are trading down below the cloud, although that is, as we've said, looking overextended. So obviously watch the 77 region, very important for the market over the next trading day, but then also watch the resistance offered at around 78. That could be tested if the market does change trend and decides that it wants to keep trading within this range over the next few days.